share with your friends. Rotus?
All right. So good morning. Yeah, good morning to all of our YouTube viewers as well. So, of course, we have Olayinka Adesina, research analyst, Stanbic IBTC. Olayinka will be going through some Agro-Allied results for some companies that have released their Q3 numbers. I wanted you to help take us through. I think let's start with Dangote Sugar. As far as their Q3 revenue growth is concerned, I think it was up by about double digits, 10% for Q3 2021, double digits, 21% 9 month. What were the drivers for Dangote Sugar?
Yes, thank you for the question, Rotus. I think majorly for Agro-Allied companies, one thing to note is that we've seen price increase all through the year, mainly since COVID and since the turn of the year 2021. We've been seeing price increases, and sugar is not an exception. Sugar prices have been increasing, and this is mainly on the back of the price of raw sugar, which is a major raw material for Dangote Sugar. And since Dangote Sugar is in the business of making money, it is obvious that they have to pass on this cost onto the final consumer. That's why we've seen the price of sugar increase. So one major driver of that revenue growth we saw in the Q3 performance is price. And when we look at things on the full scale for the 9 months period, we could say a combination of price and some volume increase has helped revenue growth in this period.
Great. Okay, great stuff. Now, their cost of sales, though, I think that was it. Was that also a double digit increase? 26% in Q3. What was behind that as far as cost of sales rising by that amount?
Yeah, as I mentioned earlier, cost of sales is dependent on the cost of raw sugar, which is their major raw material. Raw material alone, taking it into perspective of the cost of sales, accounts for about 70%. That is the value for 3Q21. On an average, we'll say this is within the 50s and 60%, but due to this cost increase, it shows to about 70% in 3Q. So the significant increase in raw material cost of raw sugar, I think that was the major driver behind the cost of production for Dangote Sugar, and maybe some other line items like the freight and logistics could also be impacting those numbers.
Okay, well, they also had a pretty big jump in their finance costs as well. Can you, what was the percentage there on that? I think was it triple digits or double? What was the behind their finance costs rising by such a large margin?
Yeah, that is where we see major concern for Dangote Sugar. This is mainly on the back of the fact that raw sugar is imported. So finance cost is, for them, it's not really a problem of interest paid to the bank. It's more of a problem of exchange losses and the finance cost they are paying on their LCs, that's letters of credit. As we know, sugar is imported into the country, which means that when you're bringing in sugar into the country, there's an exchange factor, currency exchange factor. And with the currency, the Naira being weaker, they've been recording exchange loss, and this is mainly on the back of the fact that they can't pay down their trade payables. We've seen their trade payables increase significantly. So on one side, they have trade payables increasing significantly. That's the sugars they've bought, but they've not paid for. That has increased significantly. So that cost is spending there. And exchange losses, once the Naira exchange rates moves, it affects that cost of the trade payables. So that's where they've been recording exchange losses from. And on the other side, you have these LCs that they've opened. Once you open an LC with the bank and you've not been able to meet your pay down on it as at when due, the bank starts to pay you, that starts to charge you interest on this. So that's where we've seen finance cost increase for them. If I can add to that, for 2020, we didn't see any finance cost on LCs. This is a new line item. So looking at that finance cost, which was not there in 2020, which is appeared in 2021, an increase in exchange losses, I think that those are the major drivers behind their exchange loss.
All right, and just for our viewers, LC is letter of credit, yeah?
Yes, letters of credit, yeah.
Fantastic. So you take all that into consideration, I guess, is that where we come? I think there were double-digit declines in profit before tax and profit after tax. Is that what we saw?
Yeah, that I think that's just the major issue, because you're having, as I mentioned, finance cost on letters of credit was not there last year. It's a new line item. Exchange loss has increased by about 2 times, 1.6 if I'm being accurate, 1.66. Yeah, and you have cost of production also increasing, then some other operating expenses also increasing. So looking at all this together, that is the major driver behind the double digits decline in PAT. That's profit
Right.
after tax. Yeah.
Profit after tax. Okay. So do you have a recommendation on the stock or not for Dangote Sugar?
We do. We cover Dangote Sugar actively. We have a recommendation on the stock. Our recommendation on Dangote Sugar is old, and this is mainly because we think these are near-term problems. We believe that once the government, or once the CBN can start inflowing more FX into the market, FX liquidity in the country increases, Dangote Sugar will be able to pay down on most of this cost that is spending, because it's majorly this finance cost that is the pressure. Once you can increase price to your consumer, you should be able to improve profitability on your core operations. And once you have FX supply and you pay down on these trade payables, your finance cost, your exchange losses should also reduce significantly. So for us, it's a old. We believe that 2022 possibly things could improve for the company. So that's why we are holding it for now.
All right.
All right. Thank you for that. I remember, of course. Go ahead, Javal.
Okay, Otunuga sent him this message. Says, if they're still importing so much raw sugar, how far have they all gone on the issue of sugar master plan being touted by the government?
The sugar master plan, that's another major concern. They've not gone far, if you are being sincere. If you look at a company like Dangote Sugar, their production on an annual basis could be up to 700,000 tons per sugar. But what percentage of that is being produced here in Nigeria? You could say just about 22,000, which is, to me, I'll say the whole of Nigeria, we produce less than 1% of the sugar we consume. So
wow.
Looking at the master plan, now Nigeria is not, we've not gone anywhere. Like, we are still at the early stages for that master plan.
Gosh, thank you for that question, Otunuga. Quick, as we spent so much time on Dangote Sugar, I guess I had questions on, let's go to NASCON. Maybe you can give us a quick summary of NASCON, of how NASCON salts performed for Q3.
Oh, so for NASCON salts, yeah, this is just the Dangote leg of salt in Nigeria. So majorly what they do is produce salt and seasoning. For Q3, I think they had flattish revenue, 0.5% increase year on year. And this is majorly because they had some volume constraints in the quarter. Speaking with management, I think they said a factory that delivers salt to the northern region was not operational in this period. So that's where that volume constraints came from. It's not like there's a demand issue in the market, but maintenance of their machineries and all that, I think it's majorly a production question. Prices have increased also. As I said, Agro-Allied companies have been increasing prices. Prices have gone up, but for NASCON, volume declined in that period. So that is why they had a flattish revenue growth in the third quarter of 2021.
And bottom line, okay, if I can quickly combine these two, the bottom line performance, and I guess whether you have a recommendation on the stock.
Okay, yeah, bottom line performance. It's also the recommendation on the stock is also a hold. This is because we don't expect so much increase in their EPS in the near term. As I said, Agro-Allied companies which import, they've been seeing cost increase. So we don't see much boost in their earnings per share at the end of 2021, but with 2022, we could say things will improve. And also for NASCON, they have a new refinery which is boosting their production in the West. And I think that's where profitability will start to grow for them. So I think we are happy about the new refinery and capacity for them. So we have a hold on it, just mainly because in the near term, APS is not expected to grow significantly, but in the future term, in the medium term, we should expect some significant growth, mainly by the refinery.
Great stuff, Olayinka. I don't know if you can do this in 3 minutes. Can you combine Presco, Q3, and Okomo? They both play in the same space. So quickly, in like 2-3 minutes, you can give us a summary for Presco and Okomo Oil.
Okay, Presco Como Oil. Okay, maybe I'll just take it as a sector. So what we've noticed in the sector is that oil price has been increasing significantly since the turn of the year. Oil price is about.
So sorry, crude palm oil. Abi, just not to confuse.
Thank you. Yes,
oil,
CPO.
yeah? Okay.
Thank you. CPOs, crude palm oil price have been increasing significantly. So as we know, they are producers of palm oil. You have the price going up. So definitely their revenue will go up. I think Okomu, Presco, they've recorded triple digits, about in the 100 region, 100% plus increase in revenue. And also prices are going up for them. They don't import their raw material. So cost has remained limited. So their margins have expanded. Definitely EPS has also done so well. So Presco, Okomo, I think those are the happy stocks we have right now. They are really doing well in terms of profitability. And if I can mention, on the back of this performance, Presco, the board approved a dividend of ₦1 per share. I think it's been long they did this. Since I started covering the stock, I don't think they've done it. This is the first time they're doing it. So this is really good performance on the side of the oil palm producers.
Fantastic. And very quickly, about 30 seconds. Do you have, in fact, you actually did pretty well. You did even better. I think we have a minute to go. Do you have a recommendation for them?
Yeah, recommendation on both stocks is buy. We have a buy on both stocks. We advise our customers to buy the stock. They are really doing well in the markets.
Fantastic. I think the email again, callme@stanbicibtc.com. So any folks who have any questions on what you've heard, remember to reach out to a financial advisor to act on any of the, before you act on the recommendations you've heard, please consult a financial advisor like a Stanbic IBTC. Olayinka Adesina, you've been fantastic. Research analyst with Stanbic IBTC, taking us through the agro-allied sector. Very interesting, contrasting the issues that, Dangote Sugar and NASCON are facing in importation with Presco, who, as you pointed out, don't have to import. So that shows you what happens when a company can get its raw materials from within Nigeria, the impact it has on revenue and cost. Very interesting.
Exactly. Wow. Exactly. That's really the core point there, because we import, we keep importing. There's no profitability there. Well,
exactly. The whole, also Olayinka said, the whole of Nigeria,
1%
of the sugar we consume.
Do you know that's damning, man? Jeez.
Thank you so much, Yinka. Thank you very much, Yinka.